As Americans wait for a COVID-19 vaccine, business owners are bracing for another potential season of shutdowns. But afterward, some economists are forecasting a Biden economic boom. Most experts agree that people haven't been spending like they did before the pandemic. The money that people have saved could reach $2 trillion, or roughly 10% of the economy. Much of that could come flooding back when a successful vaccine is available. But not everyone is quite so optimistic. For more now, Chris Vavares joins me. He is Vice President and co-head of U.S. Economics for IHS Markit. Chris, thanks for being with us. What do you think of this notion that we could see an economic boom under Mr. Biden simply because people have been holding back from spending as they normally would?
Well, clearly, people who've curtailed their spending as a result of the virus and the restrictions want to get back to pre-COVID spending habits. And the question is, it takes two things. It takes the wherewithal. It takes the confidence, both that that your personal finances will remain such that you can continue to spend. And you also have to feel safe venturing out to spend again. So there are some very peculiar features of the downturn in spending. Not only the mandated restrictions or the containment measures, as we call them, but also the fact that consumers just didn't feel safe going out and engaging in what we refer to as socially dense spending on services. So you have to overcome really both of those sets of concerns before you can see spending get all the way back to where it was. And it's also important that $2 trillion of...
Do you think, though, that... Sorry to interrupt you. Do you think that a vaccine, though, will do that? When people start to get vaccinated and when they feel like the most vulnerable among us have received vaccines, do you think that that will immediately boost confidence and that people will be willing to go out into these more densely populated places and spend their money?
Right. So, there's obviously a huge amount of uncertainty associated with that question. It will depend on what people see around them. And it requires many people to get vaccinated over a long enough period of time for the vaccine to remain effective over a long enough period of time, for the virus not to mutate so that the vaccine will continue to be effective. And when people see that in their own communities that the infection rates are falling, and perhaps other therapeutic treatments will come along so that it's not as lethal, they'll begin to go back. And the question is that something that happens over a condensed period of time of say 6 months from starting in the middle of next year through the end of next year? Or is it a more protracted process that maybe takes a couple of years? And that really, I don't think anyone knows. But the other thing to remember is we've already come a fairly long way back in terms of the level of spending that people saw pre-COVID. And so, getting all the way back, again, unless it happens in a fairly concentrated span of time, it's not going to give a huge boost to the economy.
So you're predicting a return to normalcy as opposed to any sort of big, quick economic boom. Is that right?
Well, at least with respect to this particular question, I think there could be other things that will happen down the road that could lead to a longer period of solid economic growth. But in terms of, do we get a quick release of this $2 trillion of savings that shows up as a big boom in the economy? I think that it's some of it, yes, all of it, probably wishful thinking.
Yeah. Well, one of the things that you said was not merely that people are comfortable in terms of the pandemic to be able to go out into retail market spaces or restaurants, places where they might spend their money, but also that they feel confident in their family's finances. And unemployment is clearly a major factor. How much do you think that will continue to impact the economy even after vaccine starts to be rolled out into the general public?
Yeah, that's a really important point. I mean, think about the initial claims numbers that we see every week. We're still looking at numbers that are 700,000 plus. That's extremely high for, that's definitely recessionary levels. So a lot of folks are still getting pink slips. And there's obviously a lot of churn in the economy because employment overall is still rising. But, when you see your colleagues getting laid off or you hear about your neighbors or relatives getting laid off, it does lead you to feel somewhat less secure in your own personal finances, and that is something that will lead people to tend to be cautious in resuming their pre-COVID spending habits.
Well, for lots of people who who've been able to continue working in this pandemic, we've become accustomed to working remotely in many cases. And as a result, some have questioned whether densely populated urban areas will fully come back after the pandemic is over. What do you see happening in terms of telework and behavioral changes? And how do you think that could impact commercial real estate?
Well, for sure, we're seeing that work from home is working very well for many, many parts of the workforce, and it's likely to continue. There's anecdote after anecdote after anecdote about how companies are looking to shrink their footprints in office space, and that cannot be good for commercial office districts in major cities and the surrounding businesses that tended to support them. So it's hard to know exactly where that will end up. And the flip side of that is, as people are working from home, even those that are in the sort of close-in suburbs, we've seen lots of evidence that a lot of the growth in housing construction and demand for housing is now moving to the exurbs. So folks are really considering moving away from those urban centers. I think, once we get sporting events and concerts and other things that tend to be located in urban centers, I think maybe the mood will switch back and people won't want to have to drive 2 hours to get to a baseball game. So it's not clear exactly where it's going to shake out, but clearly there's been a dramatic change that the work from home success has unleashed on commercial real estate, and it'll be interesting to see just how far firms are willing to go in shrinking their urban office footprints.
So let's turn a little bit to politics. We saw how the markets reacted once the networks started calling Biden, the race for Biden as president-elect. And obviously CEOs like relative calm. We know that the markets like stability. How do you expect that the Biden-Harris administration will react with the markets? That was one of the things that President Trump has, of course, said repeatedly, that he is good for the economy, that he'll be better for the economy, that Wall Street and that the markets love him. I'm wondering what that means now that we're looking at a Biden-Harris administration and knowing what we know about micro and macroeconomics, just sort of the basics of it.
Yeah, so I learned a long time ago not to try to forecast the stock market on TV, so I'm not going there. But, a sound economy, less uncertainty, low interest rates, totally good for stocks, after you strip away the short-term volatility. So perhaps having some better, less uncertainty. And this is, we've seen this in trade policy. We've seen it across the board. A big spike in uncertainty as a result of some of the Trump administration's approach to trade policy. And so getting back to sort of a more typical approach to trade policy will reduce uncertainty there, allow businesses who might be in areas where tariffs going on and coming off, are disruptive to their planning, allow them to have a better idea of what to expect. So, there's definitely, when you look at different sectors, there will be winners and losers in a Biden administration relative to a Trump administration with respect to the stock market. But yeah, by and large, less uncertainty is probably in the offing, and that will be good. Now, the other part about it is, it looks like we may have divided government, in which case the lack of any big moves could also be welcomed by the business community. Unclear.
I want to ask you one other question, because you mentioned in that answer how much the economy has thrived with these near zero interest rates. How long do you think that is sustainable, and has the last decade of quantitative easing set a policy precedent which might be hard for the Biden-Harris administration to continue to implement?
So, the level of interest rates is low for a variety of reasons, and the level of rates is likely to remain low for easily the next 3, 4, 5 years. In our sort of base case forecast, we're not expecting the Fed to raise rates until 2026 and near the end of that year. So we think low rates are with us to stay for quite a while, and it has to do with slow growth. It has to do with elevated uncertainty. At this point, not fiscal austerity, but we may take a turn in that direction as well, in which case that would keep downward pressure on interest rates.
Sure. All right. Chris Vavares, thank you.
Pleasure.